Big red day today, guys. The market is officially crashing. Or is it? I want to talk about that here. Just my quick thoughts on the market today and what you should do on a red day. I've had a ton of people hitting me up asking me, am I buying? Am I selling my positions? And the short answer is I am not selling anything that I have not changed my investment thesis on. So things like Tesla, great example of Tesla. Tesla, as of 3:23 p.m. right now, is at $614, a huge drop. I have an average buy-in cost of $885. I just bought, what did I buy, like $5,000 more worth of Tesla, which is only like 7 or 8 shares over in my Fidelity account. I'd pull that up, but just doing this video really quick here off the cuff in the middle of my workday. But that's it. I mean, if your investment thesis has not changed, whether it's Tesla or other long plays that I have, Check Cap, ARK K, I bought some more ARK K, ARK Genomics, whatever ETFs or long plays that you have, now is the time to buy. A reason to get out, though, on a down market is if your company was on shaky ground, right? So if their financials, if they had high cash burn and you feel like it's going to be tough for them to survive a down economy, and the reason that they might not survive in a down economy is because as money starts to dry up, people will spend less, right? So if business spending or consumer level spending would drive the economics of a company that has tough financials, then yeah, that might be a position that I would exit out of. But that would be a more high risk investment in the first place, and you should manage those accordingly. I talk a lot, especially in my recent videos, about making big bets and trying to make $1 million, but you got to do both. You have to do both. I said boths. Got to do both. Talking with the lisp. You have to do both because the market goes up in the long run, and so in a frothy environment, it's really easy to swing trade. It's a lot of fun to swing trade. We've had some great big wins. Huge red day today, so the total value of my account is down it's down quite a bit. I'm up overall in a 3-month position, but I'm down quite a bit today, and that's just the way that it is. I mean, you have to be willing to take the red days, guys, and you can't freak out. The absolute worst thing that you can do is sell a company with strong fundamentals. Sell a company with strong fundamentals on a market level dip, right? So think about it like this. If the reason that the value or the stock price of your company went down is because the value of the entire market went down, why are you questioning your initial investment thesis? That doesn't make any sense. It'd be one thing if the entire market is going up and then on that day your company, your pick, goes down by 10%, 20%, 5%, which is what we're looking at today. Whatever the change is, that would be different. But if everything is dropping, then you shouldn't be second guessing your decision criteria at all. It's not to say that just because everything's going down doesn't mean that you didn't make a bad decision or a good decision. This isn't financial advice. Do your own research. But just think about these things, right? The market will go up, and so if you're winning because the market is going up, you need to recognize that, and if you're losing because the market is going down, you need to recognize that too. So try to separate out the things that are happening because of your investment criteria and your thesis, and really what that means is because of things that the company is doing, and separate those out from the things that the market is doing and things that aren't related to your investment thesis. If you want to invest in the market, ETFs are a great way to go. My advice, or what I'm doing in dips like this, is just going heavily into things that I'm long on. Tesla. I'm trying to get as many shares of Tesla as I can. I think the long-term outlook of this company is absolutely insane. I think you'd be stupid to bet against them at this point. And if you got in on Tesla earlier than I did, I came in at a pretty high point, like near the top, basically, then you're probably sitting pretty right now. I mean, Tesla's, price after the split is still something stupid. I don't have the numbers in front of me right now. It's astronomically high. So hold tight on your investments. Reshuffle if you have to. Get out of anything that might be high risk in a down environment, but stick strong to things that are fundamentally sound. If you have to, look at a chart of the economy or the S&P 500 over the last 40 or 50 years. There is more pressure for stocks to go up than there are for them to go down. More people are being born, and more money is being printed. And as long as that continues, that means that more money is going to be spent, which means more money is going to be made, which means that stocks are always going to go up in the long term. There are going to be individual winners and losers, but stocks with an S and in general are going to go up. So have a long view, take the long approach, be patient. We've seen some crazy stuff the last few months that's I worry is going to make people really, really impatient. When I started this channel, though, it was all just putting in, a couple $1,000s a month and just doing that slowly over time. Got more in trading, but I'm doing both, guys. I'm doing both. Like, I'm still averaging in, and I'm doing my market plays, and I'm going to adjust as things change, as you should. So don't get stuck into one mode. Don't think that you have to do just one thing. It's your money. Do what makes sense and whatever helps you sleep at night. Thanks for stopping by. If you like this off the cuff type of content, please hit the subscribe button, hit the share button, hit the notification bell. Thank you for stopping by. My name is Forrest. I invest in stuff you should too. See you in the next one.